Hello, welcome to this video. We are going to review XAUUSD daily time frame. This is the new day open model where you trade the daily candle after it has formed a week of the day, and then it is now forming the body. And the goal for this is usually for you to catch expansion candles and maximize on your profits. And yes, so let us start now. This is today's candle, Thursday 9th of October 2025. We can label this as new day open, though this is not the true new day open based on this time. This is -4 New York time, though in East Africa, Kenya to be specific, it is a different time. So yeah, so mark your new day open. You go to the 15-minute time frame and you want to adjust your new day open to where the true new day open was, which was Thursday at midnight, which is here. You can see so this is also a new day open, but it's based on a different time because of that gap. But I'm working with this New York time. So you can see price opens and goes above, making significant swings to the upside, giving us this market structure. You can see that price closing above that, price closing above this price here, and then we have up to this point now where we have now that liquidity sweep, and then we have price dropping and closing below this swing low or this lower high. With that in place, this becomes a breaker block, the last bearish candle before a bullish move to liquidity sweep, to sweep liquidity. And you can see price comes to this breaker block and drops. So, and it is also in the same area of value as this fair value gap, this bearish fair value gap. Now with that in mind, price comes to this breaker block, and then it gives us this engulfing candles to the downside, and these two candles will give us a dealing range that we can use for entries. So with that in mind, I want us now to this market structure shift here. It is giving us an idea that this upside move was the formation of the week of the day. So as you know how the candle forms, it opens, forms a high, and then forms a low, and then closes. So we are using the same idea that this move to the upside was the daily candle forming the high, and then it drops. So at this point, price now is ready to start dropping. After this market structure shift, breaker block, fair value gap, we have this dealing range of these engulfing candles, and now we go to the 5-minute time frame to now get our entries. Our entries will be based on a change instead of delivery, a one candle change instead of delivery, which is this. Now you mark the wick to body, like that. This zone here is where our entry is going to be based off. So at this point now you want to get into this trade the moment price comes to that area, and your stops will be above this breaker block or above that fair value gap, and then you will target our 1 to 10 or 1 to 7, whichever. This one gave us up to 1 to 10. 1 to 7R to 1 to 10R is always the best when you're trying to catch expansion candles, and also it gives you a very big advantage because not every candle you get on the daily time frame will be an expansion candle. So in the situations where you get a loss, your high risk reward ratio, it will reward you and recover your losses and leave you in massive profits. So this was a very clean 10 hours before now price started doing this, whatever it is doing. And this is just based on the 15-minute and the 5-minute. You can also refine this entry further in the 1 minute, though. Yeah, you can refine it further in the 1 minute by looking for weekly candles in the area of entry. Can be an area like here we didn't have any weekly candles, so I guess that one candle change instead of delivery was enough. So with that in place, that is how you would have participated in this trade using the new day open model. So that is just a model I developed, and it is based on the fact that price opens, forms a high, and then forms a low and closes. So the goal is to catch the trade as it forms the high of the day or as it forms the low of the day. When you're trying to catch a sell trade, when a candle forms the high of the day, and you're trying to catch a buy trade when a candle forms the low of the day. And the smaller the wick, the better, because you're going to get very nice expansion candles from small wicks compared to large wicks. So that is how we would have participated in this trade, and that was a beautiful trade for XAU euro. This is actually XAU euro. We are here trading gold against euro, not gold against not silver against euro, right? Yeah, so that is how you do that. You can have a look at it and back test it, see if it works for you or not. So until next time, bye bye.